All right, Matty, welcome back to the Ask Matty Show. Matty, how are you feeling?
I'm doing excellent. Monday, new week, ready to talk about crypto and answer some questions.
Yeah, a lot of good questions to get into, Matty. But first, become a CryptoCharged member team. We are from CryptoCharged.com. We do a ton of education over there. Click the link in the pinned comment below. It'll take you directly to our website. You can scroll and browse what we have to offer there. And also shop.cryptocharge.com, get some swag for yourself. But lastly, team, just subscribe to this YouTube channel. At the very least, it's free, so do that so you can get everything we do on a regular basis. But today, your comments, your questions, your hot takes, we're about to get into it. Matty, are you ready?
Let's do this thing.
5 reasons why we're choosing Casper over XRP in 2023. We posted this a while ago, and this guy had to say, this video was made 3 months ago. The price hasn't changed since then. Is anyone still bullish on Casper?
So I actually want to say that probably between that first Casper video being made and current market price, Casper actually popped up to like 6.5 cents. So
Yes,
it actually
happened.
doubled, about double from when we originally made that video. So, and again, I want you guys to take a consideration of the altcoin market as a whole. We have seen some coins go really, really quick, right? Some of them popped off quick, like Bitcoin Cash did 3x. We obviously saw XRP recently do a 2x on the ruling in the Ripple case in Ripple's favor. We've seen a lot of other coins do a little bit of these like little pop-off catch-up moves. And a lot of that's being reflected in the Ethereum Bitcoin price, showing that there is a little bit of a rebalancing from the Bitcoin market and some of that money flowing into the altcoin market. But I want you to take a look at even some of the major caps out there, like think about like Chainlink and Polkadot and some of the bigger runners of last cycle. A lot of them are still sitting within their main accumulation range, but nobody's saying, is anyone still bullish on this because this is relatively the same price it was 3 months ago. Team, we are still within a bear market. Am I expecting a retracement sometime in the next, several months here? Yes, we are primed for that. Bitcoin flips 31K. Party time. We got another 20K ahead of us, and that means altcoins are also going to catch up and do some sort of proportional move, retracing upwards towards their previous all-time highs. There's a lot of optimistic things with the stock market right now. We have the stock market breaking over all of their 786s with Fibonacci retracements with the NASDAQ, the Dow Jones, and the S&P 500, right? So there's definitely a lot of catalysts out there for some more price appreciation upwards. I want you guys to understand, though, that the fundamentals of Casper haven't changed, right? If anything, we keep getting more news about partnerships. We also just got this new partnership with INX, allowing people to take shares of a company, tokenize them, and then sell them to investors that would only been able to previously get invested if they had 250K or more that they were making a year, or $1 million or more in net worth, right? So there's a lot of little things that people aren't paying attention to. They're solely fixated on price. So if that's you and you want to see a quick money flip and you want to make money today for today, if it doesn't go up next week, you're not in. Casper's not for you. In fact, probably most of crypto's not for you. You can't be that guy just chasing that next big pump, because by the time that pump comes, you've already missed it. So the name of the game is accumulate assets that people aren't paying attention to, that are really high quality fundamental wise. Stick with that plan. And once price takes off, foot off the gas. You've done the hard work, right? Reap the rewards.
Yeah, I would imagine. And Matty, some meme coins, I would imagine, have popped off. Some that are like completely not on the radar that the altcoins we're specifically looking at. But just in this like time frame that Russell's talking about here, we saw the SEC v Ripple case, and that did huge. That same day, XRP ran tremendously, and so a lot of payment solutions rose with that. So other than those types of cryptos, really everything like Casper sat flat. What Bitcoin hasn't really made didn't really do anything either. So like the cryptos that we're watching on a regular basis, nothing really changed. So to sit here, Russell, and be like, hey, we're still bullish on Casper because the price hasn't changed, I don't think that's what we're truly investing. We're not expecting to buy today and expecting a huge appreciation the next day. I don't think that's what we do here.
Right, definitely not.
But we'll move along here. Yoon724 says, would you say it's better to break up your staking to a couple of validators or stick with one? Great videos, by the way.
Well, I appreciate that. Thank you very much. Your guys' support on these videos means a lot to me. I always go through and read these comments, and I appreciate all your guys' questions and insight. So this is actually a question that was posed in our Discord group a couple weeks ago, and it's a good question. I personally don't have an issue with just sticking with one validator. When you delegate your tokens, you're essentially initiating a contract, right? And one of the big things I'm a proponent of, and I preach, is if you have the opportunity to stake, delegate, secure assets in primary wallets or in wallets that are hosted in Ledger Live, to utilize that as often as possible. And even if you're using a Casper signer wallet, right, that by a team make, and it's constantly getting upgraded. By the way, there was another upgrade that just came out. If you guys want to check that out on the Casper Twitter, a lot of cool functionality has been added there, including the ability to buy directly with a debit card and then drop that into your self-custody wallet. Super, super convenient, right? So again, still bullish on Casper. You got to pay attention though to understand why we're continuously bullish. But when you create that contract, right, you still need to sign the transaction with your key, right? Which in this case would be the ledger. Otherwise, we'd be talking about your decentralized Casper wallet or whatever solution that you end up picking for you. You still need to provide your signature in order for those coins to move in or out of the wallet or to do any other action, right? So the only action they can do is to continue to stake until you tell them, hey, I don't want to stake anymore, to which the 14-hour unbonding period starts and they are put back into that wallet that you originally deposited from, whether it be the Make wallet or the ledger. So short answer is I don't have a problem with it, but if it makes you feel better splitting it up between a couple, that's also not a problem.
Chop a Pack Punch 5736 says, in my experience, partnerships don't mean all that much. And I'm pretty sure he was saying this to something last week when we were talking about Casper. Matty, what is your response to this?
It's always the Anons with no little avatar of their own that have the most to say. And first of all, in my experience, not quite sure what that means. I'd love to hear a little more about your background of why you're an expert into why partnerships don't mean that much. But what I think that you really mean to say is that partnerships don't necessarily have that immediate impact on price that you think it might have, right? Google adopts this, so we expect price to do a 5 or a 10x in a single day, right? But the reality is you need to look deeper into what is the future utility this partnership could provide to this project, right? For example, on Casper right now, we know that IPW is going to be minting between $7 and $10 billion worth of intellectual property. That's not a small job, right? And this is the first time something of this magnitude's ever been done, right? So it takes time for that to actually be implemented. Now, when you start actually seeing the minting of this intellectual property on the network, that's real computation that's happening in real time, right? So what does that mean? The demand for Casper goes up, and in turn, the price appreciates when that happens, right? So when we talk about XRP and Ripple and those ODL corridors, right, we have some ODL corridors that are live now, and other parts of the world where remittance markets don't have issues with us moving money like that. We finally now have some clarity here in the United States for XRP as a non-security, right? Inherently, XRP itself does not constitute a security. I think that when you look at the number of ODL corridors that are going to be opening up with Ripple utilizing XRP as the underlying asset in their tech stack, that absolutely will push price higher over long periods of time, right? Because there's a intentional demand for computation on that network, right? On the XRP ledger, utilizing those ODL products. So yes, maybe you're not going to get the instantaneous price appreciation that you anticipate when you see a new partnership drop. But when you look at all of the other smaller companies that interact with those larger companies that could overall impact the market cap of that asset, I do think that they matter very much.
Yeah, I would say this, Matty, because I noticed this like in ours. In our ecosystem, right? We were doing a lot of reviews, especially in the bull run, of these projects like Polkadot, these projects like Polygon, and we were giving reviews. But in those reviews, we're talking about the news related, but what's going on, what kind of partnerships, the tokenomics. But that could be the same for every crypto YouTube channel out there. Like in a bull run, they're gonna get around. I'm pretty sure a lot of these YouTubers. I mean, I know for a fact they get paid by some of these companies to review their projects, and they give a honest review, but really, right, they go in and they talk about the tokenomics, but that is the point where you reflect on what they've done in the bear market, and that was the same for Polygon, for Polkadot. So I guarantee going into the bull run, we're going to be talking about Casper, Google Cloud, Amazon Web Services. Right. That's going to be the time to talk about it, especially while price is pumping, and then everyone gets invested. It's time to buy some Casper. So
that's precisely what happens, Gavin, and I'm really glad that you brought that perspective up because it's so clear and easy to see those things. And by the way, another thing to consider is that we have been covering Casper since its inception, basically, right? So we've been covering Casper for a very long time now. So we have been doing a lot of the heavy lifting when it comes to that initial research that's going to be so easily prepackaged for everybody else in the bull run. Myself, Kevin Cage, and a handful of other researchers there, X at Frontier, NATO Worlds, the rest of you guys putting information out there. We're the ones collecting all this information right now. And this becomes so apparent and clear in the bull run to where everybody just starts reciting all those sound bites and of course Casper is a great investment, right? It's at $1 right now. It's going to $4 tomorrow. Pay attention, do what you're going to do with it. But I think that they do matter a lot.
Soprano 3 aka Logan 80 says, what percentage of your bags do you keep long term? If so, what assets? I'm keeping the rule of holding 25% of my bag for the long term in assets I believe in, the rest to sell in chunks on the way up.
Yeah, so I think 25% is actually a pretty good number to consider. I say between 20 and 30% is generally kind of the pocket that I look for. So I mean, that's obviously right in the middle. But, you know, for me, it comes down to a couple things, right? What is my cost basis? You can have a good cost basis, but you might not have a great cost basis to where maybe it might be worth letting go of more of that bag at your intended targets and then reaccumulate a better base in that next run, right? But if, let's say, for example, you know, your average on XRP is 12 or 15 cents, it's probably worth holding on to maybe closer to 30 or 35% of that bag long term, because even in a bear market, right, you come back and you retest $1 to $3 as the new, you know, higher low, the new floor of support. You know, you still have an excellent overall cost basis for that long term. And of course, you can, you know, especially if you've held that bag for a shorter period of time, you know, you can avoid those short-term capital gains, which are a lot higher than long-term capital gains. So it comes down to those two things. But again, I will deviate a bit from this in the sense of, you know, let's say I'm anticipating to hold 30% of my XRP bag long-term, and I have 1, 2, 3, 4 targets I'm going to let go of in chunks. Like you said here, definitely sell in chunks. This is not a one target show. Crypto will surprise you in both directions, go a lot higher than you think and a lot lower than you think. But for example, let's say XRP, you know, I plan on letting go of that last portion of the bag around that $21 range. We get that target. I feel good about it. But then XRP does a blow off top and it hits $50 on a wick. And I have the opportunity to sell. I'm probably going to have to let go of about half of what I intended to hold on to there, because the chances of that coming way back down are very, very high. And I want to realize those profits when they're available to me. So that's probably one of the only portions of my plan in the circumstances I would deviate from that particular, you know, goal of setting aside 20, 30, or 20, 25, or 30. If we got a blow off top that doubled or tripled my expectations. But other than that, I'm going to go ahead and hold on to my fundamental long-term bags, 15 to 30%.
Bryce Williams 1900, can you please do some TA on API 3?
We sure can. And if you come on CryptoCharged.com, which you can do for 30 days free, we do API 3 every single day. But let's go ahead and take a look at a little bit of short-term price action here. And I actually set my team up exactly with this expectation. We're talking on stream about this big depreciation here. Price came below $1, around 82 cents here. I scooped some up around 82 cents. I've continued to lower my average on API 3 exponentially. And you guys can see here that we drew a Fibonacci. So we went from this recent swing high in here. We got the little top around $1.31. We had the low around 82 cents in here. And look at this. We came up, we stabbed the 702 two times, and then break down. So there's a few things that were showing us that there wasn't necessarily short-term strength here in API 3, and why I said, hey, you know, I'm willing to DCA closer to $1. Anything above $1, I'm not really so much a buyer. I really want to continue to lower my average, not just kind of have a consistent average or continue to have the same average I've been having. But we have a downward trend, right? This is a downtrend looking left to right. We don't have to overcomplicate this. Even looking a little bit further left, right, downtrend, absolutely been intact here, as most of the crypto market has been in, right? Most altcoins have a structure that looks similar to this. So when you see a corrective structure forming like this in the opposite direction, you see a clear bottom come in, that's where the Fibonacci comes in to help. So we know generally between 618 and 702, this is a big pocket where assets are either going to make it or break it. They're either going to bust through these levels and they're going to reach out to an extension like the 1.618, which also aligns with the 50-week moving average up here around $1.62, or we're going to reject from these levels and we're going to retest the lows or set fresh lows in here, right? And we got the latter here, right? We ended up getting a breakdown, a correction in the opposite direction, the healthiest of corrections you could get, topping out just here around the 100-day moving average, breaking out of also the correctional structure in the opposite direction and breaking below the previous lows here. So, you know, in the short term, I do think that we could come back and spend a little bit more time down here and accumulate below $1. This is really the golden pocket. Anything below $1 to me is really overall a very good value buy. If we're going to look at more of a bigger range Fibonacci, let's go ahead and get rid of everything on our screen here. You guys can see it's been a really choppy mess in here. And this is kind of the difficulty that people have with newer assets, is they just can't imagine price getting past that previous all-time high. And they go, well, it's set fresh lows. And I could show you guys a million examples of assets that, you know, started out really, really well, crashed, set multiple new lows, and then go back to set ridiculous new all-time highs, anywhere between a 1.618 and 4.236 full Fibonacci extension. But if we were to go ahead and say that the bottom is in for API 3, which maybe it is or isn't, you know, current market price, you know, around 83, excuse me, the lows here around 83 cents, current market price around 97 cents. If we were to get a retracement up into what we just similarly saw, right, a bigger retracement, you know, we could see anywhere from like a 6 to a 7x up here just in a retracement. But my full extensions up here, meaning new all-time highs, put us between $16 and $42. So again, current market price up to that first would be about a 15x, and then all the way up to the 4.236 is a 42x. And you might be asking yourself, Matt, you've told me that Zcash could be a 100x. You told me that Casper could be a 100x. Why would you even put any money into something right now when you're only looking at like a 15 to 40x reward? Well, there's two reasons. Number one, it's a fundamental reason. API 3 is an oracle, right? And that's not a very sexy subject to talk about. It's not the XRP that's going to, fix all the cross-border payments and make everything cheap and frictionless. It's not the Bitcoin, the easiest and most simple asset to talk about that everyone thinks is digital gold, right? But when we look at the sectors out there within crypto, right? Oracles, you don't have that many to pick from, right? You can look at Chainlink, you can look at API 3. There's a few smaller competitors out there right now. And I think Chainlink already had its huge run. Now, I think Chainlink sets new all-time highs this next cycle, but I think API 3 is going to be the oracle that really picks up that volume. So yes, I think that I might get a little bit less money-wise out of this, but the other thing that we have to consider is the rotational plays. And this is something that we can't time, right? I can't tell you if Casper is going to go first. I can't tell you if XRP is going to go first. I can't tell you if API 3 is going to go first. One of them will go first though, right? So if we get a nice pop in price action, and let's say I even get a move towards $5 or $6 in here, I might take some chips off the table and rotate that into other assets that haven't done it yet. So that's the main reason why my main focus right now is not on XRP, because price has appreciated so much. Casper, Zcash, and API 3 are still in the depths of despair. So you guys do what you will with that information. I'm going to accumulate here.
One sec. Let me get you in here, Matty. I like what you had to say there, Matty. That was some good commentary. And I just want to say, Matty, you talked about some good cryptos today that, were obviously brought up, like Casper and API 3. And I just have to say, I've had some of my friends reach out to me this week, and they're like, Gavin, where should I be buying XRP right now? Where should I be buying Casper right now? One of my homies was like, hey, where should I get a ledger at? I'm like, bro, it's not that difficult. Like, you're overcomplicating things here, team.
Right.
But all that to say is right now is a great time to be getting into crypto, and you really shouldn't be missing out on these good opportunities. Like Matty's over here teaching a lot of tools. Matty was showing the Fibonacci tool right now, and he did like a great breakdown how to set it up last week on our website. So if you're interested in like Fibonacci charting, stuff of that nature, or just general education for that matter, please go look at CryptoCharged.com. That's a great tool that you could be utilizing right now. And I do have to say, because I have seen some things about, people are they're getting pulled in two different directions right now, specifically with Casper. And, for US clients, Casper is no longer available through KuCoin, which is something we used a lot. So they're kind of getting pulled two different directions right now. They're getting pulled in the direction of MEXC, and they're kind of getting pulled in the direction of Uphold, I believe. I think MEXC and Uphold is like kind of the two that are kind of dividing up. And there's pros and cons to each, Matty. And I would like to hear you voice some commentary to that, because like Uphold, like you get that 3.5% fee, you get hit with that automatically.
Right.
And I was kind of working out the math in my head. And so, like, if I want to, like, throw a grand up there, to start buying some Casper, that's going to take, like, $35, like, right off rip, right? Or I can use a VPN, which is something that you're, very high on right now. Everyone, I'm gonna put Matty's code in the comment section down below. Or you can use something like ExpressVPN, which is, like, what, $9 a month? So what would you recommend for people right now? Because I know that was something like my friends were like, oh, like, which one do you use? Well, I'm like, well, bro, what do you want to use? Do you want to use a VPN and get it cheaper, or do you want to use the 3.5%, fee? So, Matty, what would you recommend?
So I know the VPN for some people, and I actually don't understand why it's such a hurdle for them, because once you set it up initially, like it is so freaking easy to use. I'm telling you guys, you download it, and when you click it, there's a little on button. Like the 90% of the screen is a giant on button. The only other things that you can really change on there is the country of server that you want to connect to. And that's really what we're after here, is just tricking the exchanges to thinking that we are located in a non-restricted region. So if you decide to use MEXC and they have deep enough liquidity books, you're going to be able to sign up as an American and go ahead and just not KYC. If you don't want to, you can KYC, but for whatever reason, they still want you to VPN in. So I use Australia. It's my favorite server. If you're having trouble with that, go ahead and just pick any other region that's not on the blacklist that's not going to give you horrible lag on your internet. But MEXC is a great option. The other great benefit to MEXC is that you get those DCA bots. So if you go with Uphold, of course, you're going to hit with 3.5% deposit fee off the bat. That does not include trading fees, by the way. That is just to get your US dollars onto the exchange. You have bought nothing. You have done nothing other than give them your money. And they want 3.5% just for that. And I know that they're making bank on that. There's no way that they haven't created contracts with these banks to get better fee, to get better transfer fees. They're not getting paid hit with 3.5%. They're getting hit with probably like 1%, and they're pocketing that 2.5 on you. So I just want you guys to be aware that they're not your friend. Okay. Like I said, with Mexi, you get the opportunity to set the bots up, so you get a lot more granular with your dollar cost averaging. You can set it up, on a more like bi-hourly or 8 hours or 12 hours or once a day or however you want to set it up. Again, I do still onboard everything from Coinbase and then move that over into Mexi or BitGet. BitGet's also another good exchange, but you are going to have to use a VPN on that one as well. BitGet is a really great exchange overall for derivatives as well. Mexi has derivatives as well, but I've been using BitGet derivatives a little bit longer. So it's a really great option to have both. I'd recommend trying out both, see which experience you like a little bit more. But again, you're going to need to belly up to the bar for a VPN. Either which way, the link in the description is going to be for 30 days free. You and I both get 30 days free if you sign up. So you try it out. You try out both exchanges. You maybe like it, maybe you don't. You can try out the VPN, like it or you don't. No risk either which way.
Great commentary, Matty. All words of wisdom there. But team, that is all we have time for today. I really appreciate us joining us. I really appreciate you joining us. And if you have questions, please leave them in the comment section. I will pick them out if they're good enough, and I'll bring them for the show for Matty to answer. But team, until next time, we will catch you. See you.